I tested the 7 most popular trading indicators on the 5-minute chart, the time frame day traders actually live on. RSI, MACD, Bollinger Bands, Stochastic, Supertrend, the moving average cross, VWAP. Every single one bled 6 figures. The worst, VWAP, lost over $500,000 on one contract. So we ran the whole thing properly, 400,000 trades over 5 years, both markets, to answer 2 questions. Why do they all fail, and can even one of them make money? 6 of the 7 could not make a dime. The one that did wins 40% of the time. By the end of this video, you will know which one survived, why it survived, and the one-word reason every other indicator on that list quietly drains your account. You have seen these videos. Most profitable indicators, save this: 74% win rate, 0 false signals, 90% success, big promises, and almost never a single backtest behind them, just 3 cherry-picked trades and a save button. And the newer lists barely even use these free indicators anymore. They funnel you toward a paid one. So we tested the 7 free, built-in indicators every single trader starts with, coded each one exactly the way it is taught, and let the data talk. Here is the test, and the rules were locked before we ran a single trade. 5 years of real Nasdaq and S&P futures from DataBento, the 5-minute where day traders live, plus the 15, the 30, and the hour. Each indicator coded the exact way it is taught, the entry taken on the close of the signal bar and filled at the next bar open, so nothing peaks at the future. Every trade pays real costs, 1 tick of slippage each side plus $4 commission. And we set 1 bar in advance for what counts as working. A strategy had to make at least a small, real profit per trade plus 0.05 R over at least 100 trades. All in, 422,000 simulated trades across 116 different settings. So let us start where you actually trade, the 5-minute. Here is the most intuitive rule in all of trading, the one every beginner is taught first. RSI drops below 30, the market is oversold, you buy. Watch what that does on the Nasdaq. It buys the dip, and the dip keeps dipping. Buys again, stopped again. Over 9,000 of these trades, it bled $200,000 on one contract. And it was not alone. We ran all 7 on the 5-minute, and every single one lost. Stochastic, down 466,000. Bollinger, down 362,000. VWAP, the worst of the entire test, down over $500,000. 7 indicators, the time frame they are sold on, 0 survivors. Okay, you say, the 5-minute is brutal, give them their best shot. So we did. For every indicator, we took its single best result out of 16 different settings, both markets, every time frame, every exit. The most generous, cherry-picked number it could possibly post. Here is the leaderboard. 4 of the 7 could not find one setting out of 16 that even broke even. RSI, best case, still loses. Stochastic loses. Bollinger loses. VWAP loses. The moving average cross technically found a profitable setting. It nets $10 over 5 years. 10. That is a rounding error wearing a trophy. Which leaves exactly one indicator standing, Supertrend, the one that worked. On the hourly, riding the trend until it flipped, it made about $90,000 on the S&P and held up across both markets and both timeframes I tested it on. That consistency is real, and I am not going to pretend it is not. But look closer before you go buy it, because this is where every other channel would stop. It wins 40% of the time. You lose 6 of every 10 trades with this thing. Its best result came from the smallest sample in the whole test. And the only reason it made money is that it let its winners run while the market happened to trend hard for 5 years. It is not a magic signal. It is a trailing stop on a market that went up. Change the exit, take a fixed profit instead, and even Supertrend starts losing. Now step back and look at the whole board, because there is a pattern and it changes everything. The 4 indicators built to buy low and sell high, RSI, Stochastic, Bollinger, and VWAP, lost money at every single one of their 56 settings, not one exception. Fighting the trend is a guaranteed slow bleed, and every profitable result in the entire test, all of them, came from a trend-following indicator. 16 of the 18 winning settings came down to one decision: stop grabbing a quick profit and let the winner run. Read that again. The thing that flipped red to green was never which indicator you used. It was the exit. The signal was basically a coin flip. Cutting losers and riding winners was the whole edge. That is the secret the indicator was hiding. There was no indicator edge. There was a risk management edge, and you can bolt that onto anything. So here is what to actually do. First, an indicator is just a lagging math formula of price. It cannot have an edge because it only tells you what already happened. Stop hunting for the magic one. Second, buy oversold is the most expensive habit in trading. Oversold on a trending market just means strong, and you are selling strength back to it. Third, if you take one thing from 400,000 trades, take this. Your exits and your risk decide whether you make money, not your entry signal. A great exit on a coin flip beats a perfect signal with a bad exit every time. The indicator was never the question. We put the whole thing in the free Discord, the backtest code so you can run all 7 of these yourself, and a little tool. Paste in any indicator and any exit, and it shows you what it actually did over 5 years of real data, instead of 3 cherry-picked trades. The link is below. We test, you decide. And the next time a thumbnail promises you the most profitable indicator, you already know the only question that matters. Okay, what is the exit and where is the backtest?